I was recently at an investor event in the San Francisco Bay Area. We were there at a big expo. They're talking about real estate investing, what's going to happen in the market, all that kind of stuff. And so I was there. We had a little table in the exhibit hall, had our backdrop, had our pro formas printed out, ready to talk to investors. And it was kind of surprising to me how quickly investors wrote off Birmingham, Alabama. A lot of the phrases I heard, it's just not exciting. I don't think there's really anything going there. It's kind of backwoods. It just lands flat with a lot of people, and it was just funny. It was almost universally shared amongst the attendees, right? So that's a perception problem. When most investors think of Birmingham, they think it's the southern Rust Belt. It's a legacy steel town. It's slow growth. It's not sexy. And, capital's going into Nashville, Dallas, Tampa, Phoenix. I like those. They're different strategies, of course. But here's what's interesting. Birmingham has quietly built one of the strongest employment backdrops in the country. The Birmingham Hoover Metro, that's what it's called. It has one of the lowest unemployment rates in the USA among major metros. We're talking roughly in the low 2% range. And as of this podcast, that's the second lowest unemployment rate by metropolitan area in the entire country. So here's why that matters. Jobs create household formation. Household formation creates housing demand, and housing demand creates rent stability. When unemployment is extremely low, it's a green light for investing in properties. It supports occupancy, it supports rent growth, and it reduces volatility. Another thought, the Birmingham Metro, it's got 1.1 to 1.2 million residents in the Metro. People treat it like there's a couple 100,000 people there. It's not a tertiary market. It's the largest metro in Alabama, and it's a true regional economic hub. It produces about $80 billion in annual GDP. And importantly, that economy is diversified. There's a lot of major drivers like UAB, University of Alabama, Birmingham, one of the largest academic medical centers in the country. It's got a lot of finance and banking. For example, Regions Bank is headquartered there. A lot of manufacturing and logistics, right? For example, Honda and Mercedes both have large presences in the Birmingham Metro. It's got a lot of insurance and financial professional services too. So that combines with this next component, which is affordability. Affordability creates demand. That's incredibly important for real estate investing. The median household income in the Metro sits around the mid $70,000 range, but median home prices are dramatically lower than Nashville, Atlanta, Dallas, Charlotte. And that creates a large, powerful dynamic. That population base and strong employment, but lower homeownership barriers and affordability, that is a great alternative to people looking for affordability from those surrounding markets. And I like how that looks for rental property owners. There's a few investor blind spots here, and this was where I think investors are missing it. Capital tends to chase headlines, migration stories and tech booms and short-term rent spikes. Birmingham doesn't scream at you about that stuff. It just compounds. It's just steady. Has one of the highest rent-to-value ratios in the country, which means based on the price that you pay for the property versus the rents that you get, it is one of the higher ratios compared to other metros. It's got very low property insurance costs comparative to some of these coastal markets and large metros. And it's got the second lowest property tax rate in the entire country. So let's be balanced though. It's not a hyper-growth tech boom city, although you could see some of that due to the flight to affordability, but historically it hasn't been that. Population growth can just be moderate. It's not doubling every decade, but that can be an advantage because hyper-growth markets often bring overbuilding, rent volatility, tax spikes. We've seen that in Texas like crazy political shifts. Birmingham has been more steady, and steady markets are ideal for long-term buy and hold investors. They're ideal for 1031 exchange buyers who are cash flow focused, investors who are prioritizing durability over appreciation hype, because we love that appreciation hype. We'll take it while we can get it, but it is a double-edged sword. What goes up quickly can come down quickly. So if you're a residential investor, you're looking for cash flow, workforce housing, risk-adjusted returns, and markets with strong labor fundamentals, you need to look at Birmingham, Alabama. Stop disregarding it because we've got great brand new homes available in the $260,000 to $275,000 range that rent up very, very quickly once we complete them, because this market needs housing. We hope you'll take advantage of it. See you next time.